All right, so looks like we have Andrew as well. We'll go ahead and get
Great.
started. It is last day of the month, so we'll be respectful of your time. I'm sure you need to get back to escrows, but Andrew, we have anything on the mortgage side you want to share with us?
So, it's not as exciting as the industry's making it sound. So, like I said, most of the time Monday morning I'll do a demo test run, and so my buyer today is a VA buyer. He's got a 650 credit score. He brings home between his income and his food and housing allowance right around $10,000. It's got about $3,000 in debt, some credit cards, car payment or two. Pretty typical buyer for San Diego County. And the rate that's being pushed out by UWM right now is 3.157%. So, the end is nowhere in sight, in my opinion, as it stands. I mean, we're still doing great rates. These are even good refi rates. So, this is a typical buyer. We're still at 3%. We're not seeing 3.5s and 4s just yet, but most likely we're going to see them in the near future. As I keep saying, inventory is our biggest problem. So I push this back on you. You guys got to find some more houses for us to sell. So anything else, reach out. Different scenarios. We're looking at some new jumbo products that potentially could be a special program above the county loan limit, up to $1.5 million with a 3% down payment. So that's this loan's going to be incredible if it does come out. I'm sure there's going to be a penalty on a little bit of a rate hit for someone like that. But if you can afford a $1.5 million house and you only have what is that, 30, 80 grand and 50 grand in down payment for something like that. I mean, it's not much. So
that really opens up a lot of buyers, I think.
Absolutely.
A lot of opportunities.
Right. I mean, if you could acquire a property for $1 million property for, let's say, $50,000 down payment, and you sit and you make those payments, which are probably going to be $7,000 a month. But you're making that payment in 2 years, that $1 million property is probably going to be worth $1.3 million. The way prices are going now, you'll make 100 grand, 200 grand, and you have very, very minimal amount of money, tied up in it. So for that kind of real savvy financial buyer, a program like this could be a good tool.
Awesome. Great update. We'll keep you posted on, when and if that program comes out, but I do believe it's rolling out pretty soon. So with that, we have Sherane with Placer Title over in Fresno area. She's going to talk to us about some title stuff. So go ahead and take it on over. All right. Yeah.
So Ani and I, we speak about a lot of different issues, concerns, education. I think one of the biggest ones that we're seeing a lot of right now is the realtors are not quite sure the differences or the issues that might arise because of vesting. So she asked me to speak to you guys this morning a little bit on the different things that could arise when you guys are searching a property and say you're getting ready to list a property and you're just not quite sure on how the vesting is and why it's that way. Always ask those hard questions. I know that it's uncomfortable sometimes, like if you're dealing with one person and there's another person on title, you don't want to ask, is it a divorce, or are they deceased? But we deal with a lot of those issues on our end. We get the listing, we get it going, we're like, wait a minute, there's another person on title, what are we doing with that person? And then we have to ask those difficult questions. So it's just kind of nice to be prepared ahead of time. And Ani wanted me to speak a little bit about that. So, if the husband, say it's a husband and wife, and they're on title as joint tenants, that's an easy fix. We can do an affidavit, death of joint tenant, and they just have to provide us with a copy, the blue certified copy of the death certificate, and that takes care of that problem. Now, if they're on title as community property, then, you're looking at a potential probate issue. Because, and a lot of people don't understand, why do we have to do probate if I own the house? Well, community property, that spouse's 50% interest could be willed to her children from a prior marriage. We don't know what that situation is. And at that point, the court needs to decide who's authorized to sign on her behalf. It could very well be the husband, but we can't take that for granted. That's the most common with husband and wife. Especially, I get the question a lot. They have a will, you have somebody on title by themselves, and that person is deceased, and the family members are telling you, well, we have a will. A will is just a map to a probate. So it makes it easier for the judge to decide what the intent was and who the property is supposed to go to, but it doesn't give that person the authority to sign on their behalf. So it still has to go to court through a probate process, and the judge has to give us an order determining the succession of the property and who's authorized to sign or gets that property. That is probably the most common question I get. Well, my mom has a will. Well, that's great. That makes the process a lot easier, because then they can say, well, it was her intent to give it to this person. But you still have to go through the probate. I recommend to most of my customers, if they're going to take title by themselves, then they should probably look at setting it up into a trust. The trust is the easiest way to avoid probate if you're a single person and not having somebody go on to title or onto the loan with you, because then you can designate who your successors are, who the beneficiaries are. And then at that point, if something were to happen to you, then we can just do an affidavit, change of trustee, and take it to the next successor in line in that trust. So if you've got a seller and their property is in a trust and they say, well, I'm the successor of mom's trust, then we're going to need a copy of the trust so we can confirm that they are the successor, who the beneficiaries are, and that was the intent of the trust. And then we can prepare, same thing, an affidavit of death with the death certificate to remove the old trustee and put the new trustee on, so that successor can move forward with selling the property. There's different ways people can hold title. I mean, most common is joint tenants. You see a lot of joint tenancy, and that's fine. That's most common between husband and wife. I have one the other day. It was a partnership. So a lot of people ask me, well, can we do 50-50%? Well, if you're getting a loan on the property, and I could talk about this all day long. If you're getting a loan on the property, then you have to confirm with your lender it's okay to go 50-50. I had the lender put them as joint tenants, and I just had to do a deed for them to record after the fact because they wanted it 50-50. It was a partnership thing. So, we have to look at all kinds of different scenarios. Does anybody have any questions up to this point? Because I know I'm talking rather fast. And
so I have one that comes up
okay.
that you could probably answer well. So let's say we're taking a listing and it's in a trust, and a common question I get is who should sign? So what should the agents be looking for? What document within the trust as to, is one person signing? Do all people need to sign? Let's say it's a trust with multiple people in it. So what should they be looking for to find out who needs to be signing this listing agreement moving forward? And all the documents.
Okay, very good question. Because the trust binder sometimes can be rather thick. So you're looking for the meat and the potatoes of the trust. The document that says the John Smith and Betty Smith family trust, and then it talks about who the trustees are, who had the powers of the trust, what powers the trustee has, who the successors are, et cetera. It's the main part of the trust. You're going to see a bind. Some people, they have no clue what to copy for me, so they'll bring me their whole binder. I don't need the medical power of attorney. I don't need their will. I don't need any of the other stuff that comes with it. I just need the main part of the trust. So you're looking for the trustees of the trust, the original trustees of the trust. So if you have 3 trustees, so it's John, Betty, and Sue are all trustees of this trust. Are they all alive? If they are all alive, they're all going to have to sign on behalf of that trust. If one of them is deceased, we can do an affidavit change of trustee. So it's just the 2 that are remaining. Now, if you're dealing with, John and it's mom and dad's trust, and they're both deceased and John's never done that, it's okay for John to sign for his parents' trust if he's the first successor listed in the trust. So you're going to want you want to see a copy of the trust, establish who the current trustees are and what their capacity is. Like, are they capable of signing? If they're not, then we need to move forward with changing that. And it's okay to have the successor sign if you've confirmed in the trust that they are the first successor. If they're not the first successor, so you've got 3 kids listed, say John, Betty, and Sue are the 3 kids. And then you have, Sue's trying to sell it. Well, what happened to John? Does John just not want to deal with it? If John doesn't want to deal with it as the first successor, he can resign. Okay. I just had a weird situation, which I was pretty proud of myself for coming up with a solution. Not going to lie, my head was pretty big that day. I get my best thoughts when I'm in the shower at 9 o'clock at night, but I have a seller who it's in their trust, their residence in England. Okay. We're supposed to be closing February 9th. We sent the seller package to them, gave them explicit instructions on how to go to the U.S. Embassy to get it notarized, because if you're signing anything outside of the country, it has to be done at the consulate's office and it has to be done a certain way. So we gave them the step-by-step instructions. They couldn't get an appointment in January. They can't get an appointment in February. They probably won't be able to get an appointment until March. The buyer's going to lose their lock on their loan. And so the buyer's not willing to wait. So we're trying to figure this out. Well, it dawned on me, the property is in a trust. So who's the successor? Well, the son is the successor and the son lives here in town. So I have convinced mom and dad to resign as trustees of the trust. That does not have to be a recorded document. That can be signed and sent via email. And then I can have the successor, the son, sign and sell the property so that we don't have to deal with the U.S. consulate or trying to get an appointment. But the parents have to resign. Trying to get their attorney to understand why they're resigning is a whole other issue. But the fact of the matter is they were worried about tax implications. The trust is still the seller. I'm just having the parents step down because they can't get into an adequate notary and having the son act on his behalf. So, you kind of have to think outside of the box sometimes and see how you can make it work.
Yeah, that's a good workaround. And I've run into a couple where we have people outside the US and some of the embassies are shut down because of COVID, and it's been kind of strange the past couple of years. So that's a great workaround. Now, what if it's a LLC or corporation where we have multiple members? What documents should they be looking for in those instances of who is authorized to sign? Do they all need to sign, or can just one sign on behalf of everybody?
Great question. So with a corporation, they're going to have their bylaws and their corporation documents. So you should definitely be looking at those to see who your authorized signer is. And it should clearly state that in there. Same thing with an LLC, you're going to have your operating agreement and your LLC documents. Now, I've had people try to give me just the filing with the Secretary of State. Well, I can get that. I need your actual operating agreement that shows who the members are, who's authorized to sign, what their title is, etc. And then I can establish who the signer is for my paperwork, or your paperwork. Now, with the difference with a trust or an LLC, if you have multiple members and say only one is available, they can do a resolution authorizing the purchase of the property and giving power to one specific person to sign on behalf of the corporation or the LLC. So when they submit the documents to us, if not everybody is available, and I've had that happen as well, where you've got one out of the country and one in a different area, and the guy in Fresno wants to handle it all. That's fine. They just have to have a meeting. They have to call a meeting to order. They have to type it up in a resolution that they are all giving this one person the power to act to purchase that property. And the more specific they can be, the better.
All right,
Makes
that's
it
excellent.
so much easier.
Yeah. So I'd say those are probably some of the most common questions I get is who signs. So
Who signs? Exactly.
who signs?
And
So,
okay. It's review. They have to review your agents will have to review the documents to see if they're unsure. I have a good working relationship with all of my realtors. Kind of a rare breed. I work off my cell phone, so they can call me at any time. I've had them snap pictures of the pages and send it to my cell phone and say, who do I have sign? If you have a good working relationship with somebody that you can, bounce those off of, that's always good. I mean, I know realtors like to spread their business, but those that are loyal to somebody, I respect that loyalty. And those people know my people that are loyal, they know they can call me and I'm always going to give them the answer. So it's nice to build that relationship with your escrow officer, definitely.
yeah, I agree. So, okay. Well, I didn't want to get you off track, but I wanted to, as we're going through this, ask a couple questions, and those are ones that I get often. So,
yeah, definitely just have them review the actual, because the form from the Secretary of State that they filed, that is not going to really tell you. Anybody can file that form with the Secretary of State. I could probably file that form with the Secretary of State. You really need to see their operating agreement or their bylaws of their corporation to see who that is. Same thing with the trust. That's why you need to see the trust to see how it's set up and who's authorized.
cool. All right.
I would say the biggest issue I have right now is probably the whole probate issue. So, I mean, I don't know if you have any questions regarding probates or.
We could touch on probates real quick if you want to give us a little overview. I don't have any general questions at the moment. But it's a confusing thing. I mean, I do have some literature on that in our back office, but it's a big training. And so they tend not to want to read the whole thing. I guess I should do it in a video, but if you want to give us a little overview of what a probate is, why it's needed and when it's needed, that would be great.
Okay, so basically, I touched on it a little bit already. If you have somebody who's on title by themselves and they're deceased, or say you have mom and dad on title and they're deceased, and it wasn't in a trust, then you have to go through the probate process. If someone on title is deceased, period, and there's nobody that's alive as a joint tenant with them on title, they're going to have to go through probate. And all the probate does is, and it's, everybody hears probate and they freak out. It is kind of costly, it could run them a few $1,000s. I try to find a real estate attorney that I have one that I personally work with who's fairly reasonable and fairly good at what he does. He's kind of an older gentleman. So, I mean, if you have that relationship you've built with people that you can send this stuff to, it helps. But basically they're going to file with the courts. It's going to go through the probate process through the courts. And then the court is going to issue me a document or the client a document they're going to give to me that I have to record showing that they were authorized to sign on behalf of that person. So I get a lot of family, this happens a lot with family. You know, grandma had the property, grandma deeded the property to the daughter, and then the daughter got married, and then both of them deceased, and now the granddaughter wants to sell the house, but the probate was never done because they've been living in the house forever. So, you know, I have to explain to them, like, I understand that it's your house and you may be the only heir, but that is not up to me to decide. You know, it has to go through that probate process. And then from a title company standpoint, we have to have those letters showing that, okay, it's been through the process. The court has appointed you as the executor of that estate, or if you're the only heir, then they will put it directly into your name. Then we can proceed with the sale. I have one right now where I'm waiting for a probate because the gentleman actually, no, we're not doing a probate. We're doing a Hegstead petition, which is a whole nother can of worms. But I have one where the guy bought the property. He added his girlfriend. They were on title, not as joint tenants. They were just on title, single man, single woman. And then he decided to put his half in his trust. And she created a trust the same day. So we know the intent was for hers to go into the trust as well. But we can't prove that. So instead of doing a probate on her 50% interest, we're going to the judge and asking the judge to issue a Hegstead petition, which basically just confirming that it was her intent for her half to be in the trust. Therefore, her successor and his successor can sell the property. So, yeah, a lot of people panic when they hear probate. It's just, they've got to get a hold of a good real estate attorney who knows what they're doing, who can start that process for them. But anytime you have anybody on title by themselves, it has to be addressed. They can't just say, oh yeah, I have the authority to sell it.
So with that, oh, sorry, go ahead.
Oh, that's okay. I actually caught one too. Make sure you're being aware of the people that you're dealing with and how old they are as well. Because I had one where, we'll just say John Smith again. I had one where John Smith owned the property and he died. And his son's name was John Smith. Realtor signed the listing agreement. We opened escrow. All of a sudden, we get a title report with an old deed of trust on it from before this son could have been born. And it had him and the mom's name. And we're like, wait a minute. So when I started questioning him, I found out he wasn't the John Smith that was on title. He was the son. So then we had to go back and require a probate.
Is this when that statement of information comes into play and why it's important?
We can touch on that.
So I guess before we do that, what do you do if, let's say, one of the sellers is in jail?
Depends. Is it local or is it federal? Because if it's local, then I have notaries in my pocket that have no problem going down to the jail to get a signature. But I believe there's different rules if it's federal. So sometimes they've lost that authority to act on their behalf. And in that case, you're back in court again.
Okay. It's good to know. And what if we had one a little while ago where it was a mom and a daughter on title, and the daughter was MIA. Like nobody had heard from her in years. They couldn't find her and they needed her signature.
Wow, that's tough. That's a tough one. How long had the daughter been on title? Was it the mom's house before? And then she just added her daughter to title, the daughter left?
she added her daughter onto title at some point, and a family broke apart or whatever happened. The daughter went MIA for a couple years. The mom wanted to sell the home, and we could not find the daughter.
You might, if you can establish that it was the mom's property and she only added her to title for security reasons, you might be able to additionally take that to court and have a judge sign her off.
Okay.
I mean, that's a possibility. You'd have to talk to a real estate attorney about that. But if you can establish that it was mom's property and always has been mom's property, and she only added the daughter in case something happened to her, then you could probably establish what that intent was. And then you could have an attorney do a sign off on that as well.
Okay. Yeah.
Kind of like what I'm doing with the whole intent for the trust. Now, a lot of people ask us about uninsured deed affidavits. I know this is a new concept. Maybe you've heard of them, maybe you haven't. Whenever there is a deed that is recorded that was not insured by a title company, we will ask for that person who signed that deed to sign an uninsured affidavit, which basically says they know what they were doing, they're not owed any money, and the deed was valid. And the reason for that is the increase in elder abuse, mainly the increase in elder abuse, but we have to make sure that, I had a gentleman, I asked him to sign told him that I needed the prior owner to sign an uninsured deed affidavit. He was one of those shady wholesalers on the side, and he had taken this property from this guy. And when he threw a fit that I wanted this uninsured deed affidavit, well, I told him I can't move forward without it. Well, I guess he called every title company in town, and we all require the same thing. So he finally gave me the guy's phone number. When I called the guy, he was still owed $20,000 for that deed. Supposedly this guy was going to pay him when he sells it. So was he going to pay him? I don't know. So, we do ask for that just to make sure there's nothing weird going on, that we're not, 9 out of 10 times it's a spouse signing off because of a divorce. And if they have their divorce papers, then we don't really question it. You know what I mean? But if it's two unrelated people, we kind of want to know, why did you do a deed with? Nobody does that without going through escrow anymore.
Yeah.
Why would you gift, especially with the values the way they are now?
I know.
Why would you gift this property to somebody?
So we have a REO going on right now, surprisingly. And it's going to be conveyed with a special warranty deed. Can you touch on that a little bit, on what a special warranty deed is and what maybe a buyer would want to think about with obtaining a property that has a special warranty deed, and if there could be any repercussions?
I would have to
following the
review
sale?
the deed. I would have to review the deed because I don't really understand what a warranty deed is.
A special warranty deed?
Yes, I
So-
don't see those. I don't think, even on all the REOs during the REO craze, I never saw a special warranty deed.
I didn't either, but they were basically just saying that they were going to warranty during the time that they had possession of the property. They owned the property and couldn't, I don't know, it sounds like they weren't going to guarantee clear title from anything previous to the ownership of the bank.
Oh, well, then in that case, I would suggest that your buyer get title insurance. I mean, if the bank's not going to pay for it, they still have the right to title insurance. So I would definitely want title insurance, because let me tell you, foreclosure will wipe out just about everything but IRS.
Yeah.
So if you've got if that prior owner has IRS liens, I think IRS has 2 years to come back and reclaim and claim the property. So I don't know that I would want to accept a warranty deed unless I had title insurance attached to it somehow, even if I had to pay for it.
Yeah. So Now they're putting a loan on the property, so they will have the lender's policy. Should they have something else, or is that covered in there?
No, it's not covered in there. So the lender's policy only ensures basically that the lender has priority over any other loans against the property. So a lot of lenders, they want that title insurance to make sure that the solar isn't going to take priority over their loan, or that any loans that are on the property have been taken care of. So that ensures their lender's interest in the property, that they're in first position. So if they ever had to take a loss in their position or their priority, then they could go back on their lender's policy. The owner's policy is completely different. The owner's policy protects the new owner of the property, as long as they own the property. As long as they don't gift it to somebody.
Yeah.
If they put it in their trust, their title insurance probably is still good, but that owner's policy protects the owner. That the lender's policy has they have nothing to do with each other. So the owner's policy, if you want to get into all that, why we require the SI, that's kind of a whole nother class, but I'll kind of touch on it a little bit. When we search a property, we search for secured liens, voluntary liens. Voluntary liens are anything that they've signed for: a deed of trust, if they took out a line of credit, solar, if they finance solar, etc. That's what secured liens are for. And that's by searching the property. We also search the owner's name, and we're looking for unsecured or involuntary debt, So like if they had a Capital One credit card and Capital One decided to sue them, and I use them a lot because this seems like the only judgments I ever see is Capital One. So if Capital One decided to sue them and they were awarded a judgment in court, any time you own a piece of property, anything that's against you personally will attach to that property. So if you deed out title today and the judgment hits tomorrow, it won't affect the property. But if the judgment hit the day before you sell the property, or that deed records to somebody else, then it attaches. So we have to look for child support. We have to clear those liens, which is why you mentioned this statement of information. That's why that form is so important. And I know people hate giving us that information. But if I'm my first husband, his name was Pete Rodriguez with no middle name. Do you know how many Pete Rodriguez's are in California? So every time I did anything with real estate, I had to fill out one of those forms, because we look at the social security number, date of birth, where they've lived for 10 years, to try to eliminate as many of those liens as possible. But we have to make sure that there aren't any unsecured liens against the seller as well. And that would be your IRS, family support, judgments, anything that they didn't sign for, they were taken to court for. People get upset with us over the child support. Well, I'm not a deadbeat dad. I pay my bill every month. It comes right out of my check. Well, if you went to court for child support, you have a judgment against you, whether you pay it every month or it's an automatic out of your check. You still have a judgment against you if you went to court for child support. That's just the way the state works. Now, if you have a side agreement with mom and you're paying her, never went to court, then we're not going to find a judgment against you. But if you went to court, you automatically have a judgment, period. And we have to get a release for that. So that's why the title insurance is so important, because not only are we searching the property, we're searching the individual for any judgments or liens that could attach to that property. And then when we deed the property to the buyer, we know that they're getting clear title. They're getting a good title, and we insure that. I mean, that's what we do. We're an insurance company. So we give them an insurance policy that's good as long as they own the house. And so, yes, I think it's very crucial for them to purchase their own if the bank is unwilling to give that to them. So I have not, it's kind of like that whole death on deed thing. There's a lot of, there's a lot of, we haven't dealt with those a whole lot lately. And I have a feeling they're going to get more and more popular now that that law is passed that you can do a transfer on death deed to someone. So, but we haven't dealt with them on this end yet. So
Yeah.
you might be dealing with the lender from back east, maybe?
I'd have to look at it. I don't remember who the lender was on it. I'll have to look at the contract again. We just got it into escrow like last week, so
Yeah,
it's been a while since I've done an REO. I mean, obviously we all did a lot of them back in the day, but I'm trying to like get back up to speed on the whole process going through. So
yeah, I did all the Bank of America REOs, and I've never in my life seen a warranty deed. So I would kind of look at the lender, and if they're an East Coast lender, that might be a standard practice for them.
Yeah.
Because they're an attorney state. Most of those East Coast states are attorney states, so you don't really have escrow, but you should still have the option, I would think, to purchase title insurance if you wanted it.
I would think so. We have one question. It says, I'm working with a few groups wanting to buy property together collectively. What do you think is best for them? What do you think is the best form for them to utilize to purchase property together?
Well, as we talked about the LLCs and the corporations, if they're going to be doing a lot of them, then I would suggest that they set up an LLC. It's fairly simple for them to do that. I know people have set them up online before.
Not so much that it's going to be a lot. It's going to be one larger purchase for like communal living, if you want to put it that way.
Okay.
So they're looking for a property with multiple structures on it, and each of them will take a structure, but they're going to buy it as a group, unrelated family wise or anything like that. So for communal living.
If they don't want to set up an LLC and go that route, then what they could do is determine what their percentage interest is. So it would be buyer 1 and 2, husband and wife as to an undivided 33.33%, and then husband and wife, 3 and 4, same thing as to an undivided 33.33%, and the same thing for the last couple as tenants in common. That way they have their specific interests. So if something were to happen to, say, buyer 1 and 2, if something were to happen to them, then they can will their 33.33% interest to their heirs, etc. Does that make sense? Is that answering
it does
the question?
To me, yeah. Hopefully it answers her question too.
Okay, perfect.
She said yes.
Yes. Okay, I saw that pop up. Okay, awesome.
All right.
Any other questions as far as title, ways to hold title issues that you guys have experienced?
I mean, I could probably go down a list, but I guess to close out, if you want to touch on ways to hold title real quick, we do have a couple newer agents on here that would be interested.
Okay. So basically there are many ways, and we do have this flyer, which I will email to Ani, and then Ani can pass it out. Most title companies have them in their packages for the buyers, but it's kind of a nice little cheat sheet for you as an agent. The difference between joint tenancy, tenants in common, community property, etc., partnerships, trusts. So basically, the most common between husband and wife is joint tenants. That way, if something were to happen to the husband or something were to happen to the wife, the remaining spouse would still have the property. They file an affidavit death of joint tenant, and then it's theirs. So it automatically reverts the remaining to the, and I've seen single people do it too, where it's a single man and a single woman, and they're buying, they're not married yet, so they're both still single. They plan on getting married. They do the whole joint tenancy thing. That way, if something were to happen to one or the other, then the remaining person on title gets the property. Now, it gets a little more complicated if, say, say you have a mixed family, which that always tends to be the case for nowadays. You have a mixed family, right? It gets a little more complicated because, you know, he wants to protect his kids and she wants to protect her kids. So you'll see some community property, you know, they're holding title husband and wife, but it's community property because they have their separate wills that are set out for their heirs. And that happens a lot in mixed marriages because, you know, it's their second or third marriage and they want to make sure, because let me tell you, joint tenancy gets pretty ugly real quick. Because say dad has all the money and he marries this woman and something happens to him, she gets everything. You know, then you've got upset kids because this woman, and then if something happens to her, it goes to her kids, not even his kids. So that was always my concern in remarrying, because, you know, what I've worked hard for, I don't want to go to my spouse's children. You want it to go to your children. So a lot of people will, you know, you have to look at the reason why they're taking title and how they're taking title and what the situation is to be able to advise them. Most of the time they go joint tenancy. I mean, that's like 90% of the time. But if you've got educated people who understand the law and how things work, they're going to want to set it out to protect their heirs. I also highly recommend the trust again, especially in that situation, because then you can designate who's going to take care of the trust as successor, and you can designate who the beneficiaries are and exactly how you want everything split up. So, but there are partnerships, etc. Any questions on that?
No, I don't see any in the chat.
Okay. But I will send you this because this is a wealth of information. It talks about, you know, the community property with right of survivorship, the joint tenancy, all the different ones, and who the parties are, how it's divided, how title's held, possession, etc. So it's kind of a good little cheat sheet to have.
That's usually what I provide, because I try not to advise on it. I usually push them over to you. So
that's what we're here for.
I give them the sheet and say, if you have questions, call escrow. So
yes, I get it.
Yeah. All right. Well, I'm sure you're got a packed day, so I know I do. I really appreciate you coming on and giving us a little education on some title. So all right, looks like we have one extra one. Can you go over title insurance in a transaction for a buyer?
Okay, so that's kind of what we talked about. The lender's policy is completely separate from the buyer's policy. So title insurance protects the buyer. So let me give you some examples then. Say your buyer buys the property, he receives title insurance, and he goes and tries to refinance it 2 years down the road. And then you find out that the seller was going to build something and had an agreement with the city for some deferred payments or something that we missed, right? And now he can't refinance because he owes $10,000 to the city that should have been the seller's responsibility. Something like that, or we missed a judgment, or we missed, because, you know, people are human. We make mistakes too. That's why you have title insurance. So 2 years down the road, he decides to refinance and there's a cloud on his title. That the reason we issue that title insurance, the reason it's so beneficial is now that buyer can come back and make a claim on his title insurance. If he's lost anything or been affected in any way, he can come back and make a claim, just like your homeowner's policy. You know, if you have fire damage, you go to your homeowner's insurance and you file a claim. It would kind of be the same thing. If they down the road decide they wanted to do something with their property and something comes up against the prior owner, then you go back to your title company, you file a claim. So, I mean, that's why I say it is truly, people don't understand what title insurance is, what we do. ultimately, yeah, we do escrow, we push a lot of paper, but ultimately we are an insurance company and we do insure the buyer. So it is in our best interest to make sure that everything on the seller side has been addressed, you know, any voluntary or involuntary liens, so that when we give that title to the buyer, we record that deed. We know that we're giving them clear title. Now it's yours. And, you know, it happens. I received an escrow. I just fixed it. I didn't go back to the other title company, but I had an escrow that was pulled and brought to me. And in digging, we found that the seller deeded out wrong. The other title company had him deed out wrong. She was signing as a custodian of a minor. Well, they had her sign out her personal name. Well, she's not the seller, the custodian, the minor was. She was supposed to sign out as seller as the custodian. So solution, I could have went back to the other title company. I could have made them fix it. But instead, we found the lady. She was in Mexico for the holidays. We sent a notary to the border. She met the notary at the border and we got it fixed and done. But in that situation, had they not had somebody like me who doesn't take no for an answer, you know, they could have gone back to that title company and said, you did this wrong. You know what I mean? I can't sell my property now. And they could have filed a claim or made them fix it. So that is basically the point of your title insurance for the buyer. It's good for as long as they own the property. So unless they make major changes to the title. So I don't suggest that. I see a lot of family, they pass property back and forth, and then you're going to have invalidated your title insurance if you're changing a bunch of stuff. But if you're just putting it in your trust, or, you know, then it's probably still okay. But as long as you own the property and it remains the title remains intact pretty much, then your title insurance is good until you sell it or pass away.
All right. If we don't have any others, then I think we'll go ahead and wrap up. We got a busy week, I'm sure, ahead. But again, I really appreciate you coming on. We'll have to do it again. I have some questions on scenarios on other topics that I'll write down for next time. So they'll be too long for today. So
yeah, absolutely. Let me know. I told Ani I mean, I've been doing this for 34 years. So if there's any topic you guys want to discuss, I'll be happy to jump on and see what I can do.
Okay. Appreciate it. Thanks a lot. That was awesome.
Thank you so much. All right. Have a great day.
You
Bye.
too.